You'll never guess what has happened to UnitedHealth. But first, let's rewind and look at how we got here. Because this is the unraveling of one of the biggest companies in American healthcare. A CEO assassinated, DOJ investigations, and over $250 billion in market value gone in just 6 months. This is the full story of how UnitedHealth's empire started to collapse and why investors are freaking out. December 4th, 2024, Brian Thompson, CEO of UnitedHealthcare, the insurance arm of UnitedHealth Group, is gunned down just outside of Hilton Midtown in Manhattan, just before the company's investor day. NYPD says the shooter fired from 20 feet away, fled the scene, and disappeared. Days later, police arrest Luigi Mangione, a Penn grad from a wealthy family in Altoona, Pennsylvania. On him, a fake ID, a 3D printed gun, and a notebook filled with anti-insurance industry messages. The shell casings at the scene, engraved with the words, "Deny, Defend, and Depose." Mangione pleaded not guilty to murder and weapons charges. The internet reacted fast, some calling him the working class vigilante, while others condemned the glorification. But the financial markets, they got nervous. By February, UnitedHealth's problems were multiplying. The DOJ launched a civil fraud investigation into the company's Medicare Advantage billing practices. The Wall Street Journal revealed that doctors who were affiliated with UnitedHealth had allegedly added questionable diagnoses to patient files, often without in-person care, triggering billions in Medicare reimbursements. Some in-home nurse visits generated $2,735 in extra billing each, leading to $8.7 billion in added federal payments in just 2021. UnitedHealth denied wrongdoing, saying these practices improve care accuracy and reduce long-term costs. But scrutiny was intensifying. A month later, in March, the government's False Claim Act took a hit. A special master recommended dismissing the lawsuit, saying the DOJ failed to present enough evidence and hadn't reviewed any patient records. This whistleblower suit dated back to 2017 and claimed that UnitedHealth accepted inflated payments through inaccurate risk scoring. For the moment, UnitedHealth caught a legal break, but investor confidence was still wavering. UnitedHealth was also a part of a massive FTC complaint targeting the 3 biggest pharmacy benefit managers, Optum, which is owned by UnitedHealth, CVS, and Cigna, for allegedly inflating insulin prices. But in April, the FTC paused the case, citing a commissioner shortage. With no one left to oversee it, the case was delayed indefinitely. Meanwhile, separate lawsuits from states and private entities kept piling up. The legal storm wasn't over, just redirected. Then came April 17th, a devastating earnings call. UnitedHealth missed estimates on both revenue and earnings, and they slashed their 2025 guidance by over 10%. The company blamed higher than expected care activity in Medicare Advantage, a tougher reimbursement environment, and funding reductions that began under the previous administration. CEO Andrew Witty warned, saying, quote, "Healthcare in the US costs more than it should. Procedures like bypass surgery and spinal fusions cost 4 times more than in Germany or the UK. It's simply not sustainable," end quote. The stock plummeted over 20% in a single day, the worst drop since 1998. Just weeks later, on May 13th, Andrew Witty resigned abruptly, citing personal reasons. The company named Stephen Hemsley, former CEO from 2006 to 2017, as his replacement. UnitedHealth also suspended its 2025 forecast, citing unexpectedly high medical costs among new Medicare Advantage patients. The message to investors was clear. 2025 was a reset year. On May 15th, the Wall Street Journal dropped its most serious allegation yet. UnitedHealth is reportedly being investigated by the DOJ's Criminal Healthcare Fraud Unit, and the probe has been active since at least last summer. The focus? Alleged Medicare fraud, the same billing practices previously linked to the civil probe. Benzinga reached out, and UnitedHealth responded directly, saying, quote, "We have not been notified of any criminal investigation," end quote. Also saying, quote, "We stand by the integrity of our Medicare Advantage business, end quote. And lastly saying, quote, the Wall Street Journal's reporting is deeply irresponsible, end quote. But the market was already in panic mode, and CNBC's Jim Cramer added fuel to the fire. On X, he wrote, quote, UnitedHealth is denying the WSJ story about them. If convicted of criminal Medicare fraud, well, I don't know. End quote. Just earlier this month, Jim Cramer said he'd start a position in UnitedHealth at $400. But now the stock has collapsed another 11% and nearly 31% in just 2 weeks. Analysts responded fast and downgrades were brutal. KeyBank cut their target from $575 to $450. B of A from $560 to $350. Morgan Stanley from $563 to $374. JP Morgan from $525 to $405. Wells Fargo from $677 to $351. By the close of day, UnitedHealth was trading at $283.88, down 55% from its December highs. That's over $250 billion in lost market value. In just 6 months, UnitedHealth has gone from industry titan to regulatory disaster. CEO murdered, another CEO resigns, civil lawsuits, federal investigations, and now possible criminal charges. Investors are fleeing, lawmakers are watching, and critics of the US healthcare system see this as a long overdue reckoning. So what happens next? Will UnitedHealth bounce back? Or is this just the beginning of a much bigger unraveling? What do you think? Is UnitedHealth being unfairly targeted? Or is this all a part of a bigger system finally being exposed?